Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome into an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I'm your host, Mike Leon. Brian here is a seasoned tax attorney based out in Tampa, Florida, and the founder of Tampa Tax Relief. For more than 25 years, he's been helping individuals and business owners across the country resolve their serious IRS problems, anything from audits to tax debts to cases in the U.S. tax court. Today's episode, we're going to be talking about why keeping your business structure simple can make a big difference, especially when it comes to the IRS. Brian, it's good to see you as always. Let me ask you at the onset here, when business owners think about their business structure, right? They're listening to this episode, they're thinking about all of that. Many tend to focus on the type of entity that they choose. I know I did, LLC, S Corp, et cetera. From the IRS standpoint, what actually matters the most?
Well, thanks again for having me, Mike. Really, for the IRS standpoint, they don't care. We're talking about small business. So within the IRS, small business is defined as $20 million a year or under in gross receipts, which for some people is very large, but just relative to all the businesses out there. So from the IRS standpoint, they don't really care. I know going through the work with different revenue officers and revenue agents and through examinations and that, it sometimes seems that if a business has formed either an S Corp or an LLC, there's just an easier way to kind of wade through all the different things and to really have more bright lines from an IRS perspective, which ultimately helps the taxpayer.
So let me ask you then, where do business owners, in your estimation, your experience doing this, where do they tend to get in trouble? Is simply because of their structure or the way they are? Where has it become more complicated when it needs to be?
I think where it really gets complicated is when people start a small business, especially somebody really proficient at something they do, and they say, I'm going to go on my own, I'm going to strike out on a business. A lot of times they kind of mix up their personal and business expenses and the way they monitor the money, the way they run it through their bank accounts or bank account in many cases. And things just kind of get garbled up. And ultimately that turns into kind of a mess. Not that it's per se necessarily wrong doing it that way, you can, but it's just very much complicating something that can be very much streamlined.
Well, it funnels into the follow-up perfectly. So how does that clear separation, let's talk about how we do that, between personal and business finance help prevent these issues, especially for the 1099ers out there that are listening to it and the self-employed ones?
Well, the easiest, simplest thing to do is open up a checking account for the business. And it doesn't have to be a business checking. I know that from my own experience, business checking accounts offer a lot more services. But when you're starting out, a lot of those services really you don't need or you'll never use. You can just use a simple, what they call a consumer or personal checking account. And you can just simply label it even internally as for business. And the number one thing to do is to put all the business revenue directly into that one business checking account. And then from there, work to pay business expenses. And then ultimately, obviously, you're going to pay yourself at some point, either through payroll or through distributions. But it's just important to have one designated account strictly for business deposits and specifically use that account only for business expenses. And to that, I just want to add, paying yourself from a business in the broadest sense is a business expense. Without drilling down too much on it, you can pay yourself from the business account, but you just want to have a bright line separation between that and your personal checking account.
So Brian, what tends to happen when businesses start using multiple accounts or even multiple payment systems, entities, and they don't have consistent documentation? What tends to happen in those situations?
It's a mess. And a lot of times people come to me and I'll say, how many checking accounts do you have for your business? And they'll say, oh gosh, three or four different banks. I say, why? And they go, I don't know. And I think sometimes people are given bad advice, or maybe they think that's the way to go. And really, until you're 7 figures and up, you can operate out of one business checking account. You really don't need multiple accounts. And one other way to kind of streamline things ultimately overall is it's probably a good idea to have your business checking account at the same bank that you have your personal checking. And that makes transferring between the accounts in terms of paying yourself much easier. And it's certainly one login to monitor both accounts.
Can you share an example, a client example of a time when maybe a confusing or overlaid layer business, they set it up and it made an IRS matter just way more difficult than it needed to be?
How much time do we have? Um, People call me.
Podcast.
It's just it's primarily somebody with multiple accounts. They had multiple, and of course, more and more businesses now are using electronic pay. There are different types of Cash App, Venmo, PayPal, Zelle, and things like that. And they had all their different electronic payment services, each one going to a separate business account, and then trying to reconcile between the business accounts and cross paying and this and that. And I mean, it was just you kind of threw your hands up on it, but ultimately what came back is, and we talked about this on a prior audit podcast, ultimately it came back to the deposits, because everything begins with the revenue for a business. So just one business account is the simplest thing you can do. And again, this is where people get caught up. They start looking at business accounts and they say, well, they want $100 a month for me. You don't need a business checking right out of the gate. You might down the road, and you can always upgrade to it. But just start out with a simple checking account. And there's still banks out there that offer free checking, or very minimal, maybe $10 a month. But gosh, I could go on, just different various things. And these are not, I want to be very clear. My clients aren't people that are setting out to do this. They're the people that retain our office. They're coming here for help. They're not people that are trying to purposely cloud things or make it difficult for themselves or for the IRS. It's just they get going. And probably the biggest thing from there is people, when they start a business, oftentimes they're very good at what they do. I get a lot of construction trades, people, roofers, plumbers, electricians, things like that. They're really good at what they do, but nobody's really taken the time to show them how to set up the business. And so they just get going, and they get so busy at times that it seems like they're never able to catch up. And that's why I think if you just start off with one checking account and designate it for the business, then that's a really great place to start, because unraveling it from there, it's a lot easier.
Brian, also on a previous episode, we've talked about payroll tax obligations. So let's talk about that here. What kinds of structural clarity can help the IRS understand who's responsible for what?
Well, I'm going to back up for a minute, because when you were asking initially about what's the best way to go, is it an S Corp, an LLC, sole proprietorship? Basically, for small businesses, the best thing to do is either an LLC or an S Corp, subchapter S Corporation. And when you create those, and you can do that on a simple legal Zoom as an example, you can just go online and create it that way. Once it's created, the IRS will send a letter saying to the business owner, you have an option to designate a separate corporate tax return be filed for the business, or you can just continue to put everything on your personal return under what they call a Schedule C. And a lot of times people don't see that, so they don't necessarily know to mark the box. But if you mark the box for a separate corporate return, I'm a big believer in that. Yeah, it's another return you have to do every year. Yeah, you have to pay an accountant, CPA to do it, but it's worth a few $100s or so to have that clarity. Once you have that, you're designated with an employer identification number. And really, for a payroll tax purpose, you obviously are going to run everything under that, what they call EIN, or employer identification number. And so that helps with payroll to determine exactly who's responsible ultimately for the payroll, and ultimately where it's coming from, what business or what entity.
Brian, when somebody reaches out to you and you start reviewing the business, right? And they're facing the IRS issue. What parts of their structure do you look at first to kind of diagnose how this problem developed?
The first thing I ask them is, how many checking accounts do you have overall? And when I say you, I'm talking to an individual. Maybe it's a husband and wife, maybe it's a couple of guys or a couple of ladies in business together. But I'll say, how many total checking accounts do you have? And by that means, are you a signer on an account? So for a lot of my clients in their 40s and 50s and 60s, a lot of them have young adult children. Maybe in college, they'll have a checking account for one of their adult kids, and they say, well, I'm a signer on the account, but I don't use that account. And I say, well, that's fine, but how many checking accounts do you have? And then the next question I ask is, when your business takes in income, which account or accounts does it go to? Because again, everything has to back to the income coming in to kind of find out from there moving forward. But those are really the first two questions I ask. And a lot of times people don't even realize how many different accounts they have or that they're a signer on an account. And so I kind of get people to kind of streamline what they're doing. Doesn't mean they have to change everything overnight and go out and do all that kind of things, but just to get to a point where, especially if you're running on a calendar year, end of the year is a great time to go ahead and make those changes.
Brian, lastly, as we land the plane on this episode, someone out there, they're realizing their setup is a little messy right now, or it's inconsistent after hearing you speak. What should they understand about how a tax attorney, like what you guys do, step in to kind of clean up the picture before the IRS digs deeper?
Well, again, it's about asking questions and finding out what kind of industry they're in, which makes a big difference. Certain industries have certain type of deductions or expenses they can claim just inherent to that industry, and finding out just what they do, what their role is, which is usually the owner and usually hands-on, but sometimes it's a kind of a side gig or something they bankrolled or something. How many different bank accounts they have? How is the money brought in? Is it through electronic payments? Is it through checks? Is it a cash business in some cases? And then taking a look at either whatever letter or notice they may have received from the IRS, because usually that's something that's going to generate a call to us. A lot of times people know that, I haven't been doing it right for a long time and I keep meaning to change it, but it's like so many things. And I mean, who really wants to bother with taxes? I mean, it's boring and it's expensive and it's just something people don't want to mess with. And so I'll say, let me see what the IRS is looking at. And then just letting them know, hey, listen, it's not impossible. Okay. I've never seen a case that's impossible to unravel. We'll get you there. And if you're serious about staying in business, we'll help you stay in business 100%.
Brian, thank you for the time and insights as always. I appreciate it, my friend.
All right. Well, thank you, Mike.
And that's it for today's episode of the IRS Debt and Audit Podcast. If you want to learn more about the work that Brian and the team do, helping individuals and business owners resolve their serious IRS problems, can you do me a favor right now? Visit tampataxrelief.com today. Thanks for listening. But before you go, don't forget to like, subscribe, leave a review and comment, or share the episode with someone who needs to hear it. As always, I'm Mike Leon. See everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.